Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a positive start amid optimism across the globe. GIFT Nifty indicates a mildly positive start for Indian equity markets. US stocks notched the longest monthly winning streak in 2 years. Optimism about the falling inflation and resilient growth essentially has encouraged an increasingly broader market gains. Let's talk about Asian equities. They've advanced ahead of RBA China data. Reserve Bank of Australia will deliver its latest interest rate decision later today. Let's talk about FII trend. They've sold shares worth around 700 odd crore and DIIs they've bought to an extent of 2,488 crore. Hindustan Unilever, Infosys, Godrej Consumer, along with Ultratech and M&M are among some of the stocks that have seen the highest delivery. Earnings that we'd like to watch out for. You have PVR Inox, Thermax, Cholamandalam Investment, along with Anantraj, Anupam, Rasayan, Adani, Total Gas, Dalmia, Bharat Sugar, Godrej Agrovet, Metro Brands, Thyrocare, and Welspun Enterprises, which will be in focus ahead of the quarterly earnings today. Let's talk about FNOQs. 85 stocks have seen long build-up, and this includes the like of Page Industries, Delta Corp, Hindustan Copper, and Siemens, amongst others. Let's talk about 17 of them which have seen long unwinding based on the OI percentages. This includes Syngene International, Colgate, Exide Industries, Dr. Lal, and Zydus Life Sciences. Let's also talk about 32 stocks which have seen short build-ups, and this includes the likes of M&M Financial Services, Piramal Enterprises, DV's Lab, and Nalco. 52 of them have seen short covering activities, and this includes Laurus Labs, Indiabull Housing Finance, NTPC, and Naveen Fluorine. Also, if you talk about the stocks which are currently under FNO ban, NSE has added Piramal Enterprises to its FNO ban category, while it has retained Indiabull Housing Finance too within that list. But let us get going and discuss some stocks and strategies with Sneha Seth, Derivatives Research Analyst. Good morning, Sneha. Strategies and the level for Nifty and Bank Nifty in an earning heavy week, and of course where the setup is a little bit more bent towards the macro and slew of central bank meets which are going to take place across the globe.
Very good morning. If you see market, recently we had seen some profit taking from the higher levels, and Nifty, Bank Nifty both have approached toward the 20 DEMA in the daily chart. So at present, I believe the kind of shortcut, the kind of move yesterday we saw addition of fresh long positions in Nifty and Bank Nifty both. If you see the recent correction or recent profit booking was only because of long unwinding. We haven't seen any short positions. So from here, if we see that the kind of recovery we have seen, I think there should be a follow-up up move. And on the higher side, 19,900 levels will be important to watch out. Any move beyond this shall bring back the overall confidence, and especially if you see FIs who have covered their short long positions recently, the long short ratio was around 72 and now it is around 52. So if there any fresh buying from their end, I think Nifty can easily move beyond 19,900, which is the immediate hurdle. For now, the supports will be around 19,600. If we see options activity as well, we have seen decent writing inputs in 19,600, 19,700, which is again a positive thing. In case of banking index, I would say that the support is around 45,300 and the resistance is around 46,300. So this is 1,000 points move, 1,000 points range for banking index, but the overall biasness remains positive, and there is nothing to, no data as such that indicates any major correction. Any declines should be used to add longs in both the index.
All right, that's the strategy. You can probably add more on every declines that you see. Let's also talk about other three recommendations that you have in mind, along with Maruti Suzuki, looking at the charts. What would you suggest to the viewers out there?
If you see Maruti, recently it has been consolidating. On the higher side, 9,850, that is the hurdle. I believe we can soon surpass those levels. We are just hovering around the 20 DEMA, but I think the overall chart structure remains very strong. And any move beyond this zone, especially 9,850, so we can see an up move towards the recent highs around 1,000 plus, 10,000 plus levels. Sorry.
All right, Sneha, we are just going to leave it at that. Thank you so much for taking out the time and speaking to us. We're going to be addressing in the markets open and then address the stocks and news for you. Maruti Suzuki, a bit disappointing numbers out there, but we're going to get into that in just a jiffy. Let's talk about the markets open. We're looking at gains coming in, 0.1% of gains coming in, 19,750 mark, well above that level. Let's talk about Bank Nifty index overall for you, just to see if that is seeing some amount of outperformance coming in. While gains to an extent of 0.2% out there for Bank Nifty index, and the levels have been pretty smart enough, a bit of an outperformance also coming in from the Bank Nifty index. Let's talk about the small cap index and the mid cap index, just to see how that is stacking up for you. Pretty much in line with what the larger counterparts are doing. Even in terms of the small cap index, well, we are seeing a little bit of outperformance coming in from the small cap index. Technically, the trend that has been playing out thus far, and that continues even in today's session. 0.5% of gains coming in on that one. And if you talk about, the sectoral indices that we are seeing right now, auto index is in focus because Maruti Suzuki is reported below estimates number. Do remember the fact that the numbers will start trickling in for the month. And right now we're seeing a bit of flatness or skepticism around the basket. Flat trend with a bit of negative bias coming in for auto. IT is behaving a little differently. We're seeing gains to an extent of 0.2%. Remains arguable if the valuations remain attractive for the investors to lap up these equities. FMCG, trend no different as compared to what we've seen in auto. Flat with negative bias. Let's talk about the other sectoral indices. Something like a pharma isn't doing well either. We're seeing losses to an extent of 0.1% coming in for the pharma index. Overall, consumption story also remains pretty much same. We aren't looking any serious amount of uptick coming in the sectoral indices. A flattish trend playing out. Well, a bit of losses, sharp losses rather, coming in for the real estate. Oberoi Realty is one among the companies which was reported in the numbers. And for infra, would the story be any different? Well, in today's session, down and out. Losses of around 0.25% coming in for the infra. Metal index shining bright. The trend that has been intact for a couple of days. We're seeing gains to an extent of 0.4% for metal index. Remains to be interesting how Tata Steel, JSW Steel and Hindalco will be stacking up in today's session. Let's talk about the top gainers and the top losers that we have overall on the list. Advances and declines too, just to assess the market breadth. 25 advances versus 25 declines. Well, evenly spread. Market breadth is pretty much evenly spread. And let's talk about the top gainers and the top losers. We are looking at gains for the entire metal basket. We saw those gains. Hindalco, NTPC and Tech Mahindra are among some of the companies which are shining in bright. Bharti Airtel, Hero MotoCorp and JSW Steel are among some of the other gainers that we have on the list, along with Ultratech Cement, ICICI Bank and Tata Motors. Let's talk about the top losers that we have on the list. Power Grid, Maruti Suzuki, ONGC, along with something like a BPCL, UPL and Grasim, which are essentially are some of the top losers that we have. But let's discuss the stocks essentially which have made it to the list. Maruti Suzuki, Oberoi Realty, like I spoke about earlier. Maruti Suzuki a bit of below expectation number. Net profitability is around 2,485 odd crore versus 1,000 odd crore in the corresponding quarter. Street was working with a number of 2,400. So it's pretty much in line with the estimates when it comes to the bottom line performance. In terms of the top line, 22% uptick and better than what the street was estimating. The number is coming at 32,327 crore. Street was working with an estimate of 31,400 crore. Let's talk about the EBITDA performance. 56% uptick out there, and the number here has come in at 2,983 crore. That's where the disappointment was kept in, because analyst community was factoring in a number of 3,200 crore. So you can clearly see the disappointment creeping in on the operational front of the company. Margins at 9% as compared to 7.2%. And the board has also approved in termination of contract manufacturing arrangement with Suzuki Motor Gujarat. That's another one where to acquire Suzuki, the company is going to be acquiring in Suzuki Motors 100% stake in Suzuki Motor Gujarat. The acquisition of Suzuki Motor Gujarat is going to be from the Suzuki Motor, which will be done before March 31st, 2024. Now, do remember the fact that the company said that Suzuki will be investing in Gujarat plant and Maruti will be benefiting from a asset-light model, save cash. And now they've gone ahead with the acquisition. So that's a bit of disappointment against what they've said versus what they're doing. Let's talk about the review. What Nomura looks at it, the way, they look at the margin figure being a little bit of drag by staff and other overheads, and also talks about the EBIT transaction that needs to be noted here. So a bit of overall disappointment creeping in for Maruti Suzuki. Right now the stock is trading lower with losses of 1.5%, like you can see on your screen. Overall reality, another one for you. Net profitability down by 33%, and the revenue is also down by 0.3%. So flat revenue and a bit of downtake coming in on the bottom line performance, essentially also because of the decline that we've seen in operational numbers. 3.7% downtake out there. Margins have shrunk a little bit, 52.1%. That compares to 54% in the corresponding quarter. Today, PVR will be coming up with numbers, and what the street expects is, do bear in mind the fact that the company had reported in loss to an extent of 333 crore in the quarter 4 or FY23, and this loss is only expected to narrow down to 91 crore in this quarter. Essentially, it's been the muted Hindi content performance which has dragged the box office revenue. But will Hollywood and regional films give the required fillip? Remains to be seen. DLF, where the block deal perhaps could have already taken place out there. And let's talk about Easy Trip Planners, which is going to be acquiring in almost 51% stake in 3 travel tech companies. And they're going to be acquiring in stake in Guideline Travel Holidays, Duke Travels, and TripShop Travel. The board is also approved in raising on funds by the way of issuance of equity. It's going to be done in one or more tranches, and that's going to be via preferential allotment. Blue Star, another one on your list out there. Considering a fundraising on August 3rd, the board is going to be meeting in for that, and this is going to be done through the issuance of equity shares, debt, and warrants, along, or for that matter, could be even preference shares, but would be by the way of private placement. So overall, that's the long and short when it comes to the stocks and news that you need to have in your mind. But let's navigate our conversation along with the fundamental lines. And AK Prabhakar, Head of Research, IDBI Capital, joins us to take this discussion forward. Good morning there.
Good morning.
All right, Mr. Prabhakar, any difference in trend that you're seeing for the equity markets? We've seen FII being on the selling side for the last 2-3 odd sessions, especially after the Fed has raised the rate hikes. Do you see a change of trend in terms of FII anytime soon? And if that's the case, do you see a bit of losses coming in, or let's just say consolidation coming in for the broader markets?
Yeah, no, there are few things which are very interesting. In the last 4 months, from the lowest level, Nifty has given almost more than 20% return. So after 4 months of good rally and many stocks giving more than 30-40% return in mid cap and small cap, there can be a pause for 1-2 months. There are disappointment in the results, so that could be a major impact. And foreign funds, there is a need and there is a want. So that will differ. Maybe I don't track it very. But valuation-wise, there are few sectors and stock which are becoming attractive because the results are disappointing and they are correcting. There are few stocks and sectors which are rallying. Now one side, and there we need to take some profit. So it is a mixed bag. So I will not say it is all hunky-dory.
Sure. I mean, let's talk about the trend that has been playing out overall in the large cap space also. You've seen how HDFC has performed. You've seen how M&M got a shocker with that investment coming in RBL Bank. You see how Infosys took a beating after the shocking guidance. Essentially, these are all large cap companies. Do you think the sell-off, if at all, will be sharper in the frontline counterparts as compared to that of broader markets?
In HDFC case, whenever you have a merger and the kind of upgrade they are showing, now they'll be opening about 1,500 branches this year and next year. That means, the new branches take almost 2 or 3 years to break even. So that pain will be there in HDFC Twins. And this is a bank which has given fantastic result in the last 25 years. And now they are saying we will almost add branches. Last year they added about 1,200, and coming year and next year another 3,000 branches, which is huge. So when this happens, underperformance is likely to be there. So I don't think we should worry more. But if you're a long-term investor, there is nothing to worry. So case by case, there are pain points. For example, Mahindra. So now there is a con call, there is a result and con call. When they clarify, we will know what is the roadmap. They buying RBL Bank. So let us wait and watch. Post correction, I think Mahindra looks very attractive to me. And if the clarification comes satisfactory, one should be a buyer in Mahindra and Mahindra. And in the case of IT stock, it is seasonal. So you have a high interest rate which is bothering the globe. So I think but I'm positive on IT. If you are looking at 2 to 3 years time frame, one can buy. We like Infosys, TCS, LTI, Mindtree. These are good stock and these are bad times. So you have to do slow accumulation in these stocks. They are not going to move in a hurry in the next 6 months to 1 year. But for a long-term investor, these are opportunities to buy.
So anything specific that you like within the IT basket?
No, LTI, Mindtree and TCS is something I like. Infosys, the valuation is very attractive at current levels.
Also, let's talk about pharma. Since we have spoken about IT, which is also a defensive counterpart, let's talk about pharma for that matter. We've seen significant amount of momentum building in for these stocks, especially after Cipla's guidance out there. More clearance coming in from US FDA. Valuations are still below their long-term averages. Talk about the FII ownerships, they are undervalued there. How are you looking at this space? Do you think opportunity is there? And if yes, which are the bets that you'd like to pick?
Results have also surprised on the positive side. I think Ajanta Pharma, Sun Pharma, Dr. Reddy, all these are very good stock. Even Divi have and we even like Gland Pharma, where the stock has corrected almost more than 60% in the last 1 year, and at current level it's very attractive. Even Syngene looks very good. Again, if it corrects, it has run up too fast in the last 1.5 months. But if it corrects, one can buy there also. So there are pockets where you can buy. Sun Pharma, Dr. Reddy, these are the leaders. Buy something where the huge correction and value will be created over a period of time.
Sure. Also, let's talk about the entire primary market. How are you looking at that space? You have banking NBFCs probably, which is going to be opening in for subscription, and we have Concord Biotech, essentially Junjunwala back company, which is going to be opening in for subscription in a day or so. Does that interest you? The recent companies which have offered their equities within the primary market, does any of the option attract you at this point of time?
So I have a very different view on IPOs. It is not my cup of tea. I've been tracking markets for almost 34 years now. And equity, IPO is just a fluke. If you are not there in the right stock, then the probability of you losing money is very high. I like to see companies where I have data of 3 to 4 years minimum. So if the data is for 10 years, I'll be even more happy. So new listed company or even 3 years old company which is there in the street is something I don't look at, because for me, I need consistency. I need to see what is the roadmap of the so for which I need data. So IPOs don't give you so much data. So I normally stay away, except for a few companies where, for example, DMart or HDFC Life, everybody knew about these companies. That is okay. But something on the new block, where data is not available, I would stay away.
Mr. Prabhakar, we got your point loud and clear out there. But let's talk about what's the frenzy that you see what do you make out of the frenzy that you see within the small cap and the mid cap shares, particularly small caps? Do you see this ending the same way as we saw in the rally that took place in 2018 and 19 with a big crash, or is just too pessimistic to look at it that way?
See, no, every bull market, has that mid cap and small cap outperforming. We had a bad time about 6-7 months back where mid cap and small cap corrected, and now we are in the last 5-6 months we are seeing a rally. So always Nifty is not doing anything major. So small cap will continue. Maybe we will have a odd correction, but this rally might continue. And beyond a point when the valuation gap is very big, then Nifty will catch up. So this happens in every bull market, and maybe election is election around the corner in 2024 May. That can be something which is which can pause this rally. Otherwise, I don't see anything which can pause the rally in mid cap and small cap.
All right. So you see a pretty bullish trend playing out at least for this year, or also for the year to come by?
Yeah, no, we have never seen a rally like 2003, 2008. After 2003, 2008, that 5-year rally, we have never seen anything like that. So it is missing. So once things come into that phase, then we might see it. Maybe it will start in 24 or 25 until 28 or 29. We might see it. So I'm very optimistic. There can be odd correction, but that would be an opportunity to buy.
What gives you that sense of optimism apart from the fact that, sure, FII trends have been supporting until now? It's an election, it's in the run-up to the election year. Which are the other trigger points which drive the sense of euphoria for you? And given that, what are the pockets where you see this exuberance coming from?
See, we need to understand that the rally is just with 25 or 30% of the stock happening. 75% has not participated. So it is not an overall rally. So there are many sectors. You take agrochemical. The results are very disappointing. They are at the lowest point. So there are many things which are happening. And the other side, there is a huge capex getting built. And government PLI scheme has started to give a lot of benefits. Defense as a space has started to do well. But in the defense space also, there are companies where it has not rallied. You take, for example, Bharat Forge. It is still looking attractive. They have moved away from auto. So there are lot of value which is there on the table, but rally has not happened. You take logistic companies, their results are not good. And the stocks have also corrected. But if you are looking at 3 to 5 years, then logistic company can do very good. And in a growing economy, logistic is very important.
All right. Last question that I have is, how about the metal space? There is this building momentum being seen within the space. How are you looking at the situation across the globe, especially for non-ferrous companies? Ferrous companies have also been doing well, but Hindalco in particular has been doing too well. Your assessment on the same and the trigger points behind the rally?
Metal, I don't think the rally is going to be in a hurry. We are negative, and we maintain our negative stance on metal. So because of the global slowdown and data coming from China is not something positive. And China is a major player. So we need to watch China there. So I like something which is India connected. So metal is more to do with China. So it is better for me to stay away in this.
All right. So that's the word of caution coming in for the entire metal basket. But sir, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.